Hello dear traders, let us review the events of the past week. On Monday, the Chinese stock market closed higher for the first time in 5 days. The Shanghai Composite Index advanced 2.9% during the last trading hour on speculation that the state-backed funds were buying shares to support the market. Newly released data showed the Chinese export for 5.5% in August from a year earlier in dollar terms, while the import contracted by 13.8%. Trading was volatile, with the volume of shares traded at about 80% below the high of June 8. On Tuesday, the US stock market was rebounding on expectations of new measures to support the economy by the Chinese government. The dollar weakened. The ICE US dollar index was down 0.2%. The S&P 500 index rebounded after the fall on Friday, closing 2.5% higher, the second largest daily gain since the start of year. On Wednesday, the European stock market grew for third consecutive day as the shares of the mining companies were in the black. That followed the news authorities in China and Japan planned additional stimuli for their economies. The euro strengthened against the dollar. The pan-European stock index, 𝗃 Europe 600, advanced 2%, while the Germany DAX was 1.6% up. On Thursday, the commodity futures were mixed. The weekly rise of wheat and corn prices was so far 2 and 3% respectively. It should be noted that the grain quotes are now close to 6-year lows. The coffee price hit the 1.5-year low due to the weakening of Brazilian real. It plunged to its lowest since October 2002 after the Standard & Poor's downgraded Brazil's rating to junk level. Investors were expecting the massive coffee export to be sold for US dollars in the global markets. This week, we recommend paying attention to the release of the retail sales in US on Tuesday, the jobless claims on Thursday, and of course the Fed's statement later in the day. At the end of the day, the press conference of Federal Open Market Committee will be held and the monetary policy guidelines will be released. This key event is likely to provoke the volatility on US stock exchanges and foreign exchange market, which may be used for trend trading. This was all for the past week. We wish you ample volatility and happy trading. See you next week.